Okay, ladies and gentlemen, thank you so much for your patience. Today was quite a roller coaster for me over here, having had a series of meetings and out of town, and so had to get inconvenienced a little bit. But that notwithstanding, I had to find a good location to be able to deliver this session for today. But interestingly, for some reasons, I actually did think in my mind, I don't know why I confused the days, but for some reason, I thought that today I was going to handle the Ethereum and smart contract. Yeah, so I was just trying to really get myself together to ensure that I deliver on this session. But really, Bitcoin for me is probably, I would say, I don't know whether I should say the easiest to deliver on. And that is simply because Bitcoin is really at the core of what we talk about today called blockchain. So the simple questions that we ask ourselves is, what is Bitcoin? And another simple question that is important for us to ask is, why is Bitcoin a sensation? Why is it news? Yeah. Hardly do you find sessions where people are talking about what is money. Yeah, because literally everybody knows about what money is. So talking about what Bitcoin is quite not a generic, or rather not a layman's question. You will not walk in the streets of India or wherever you are, or the streets of Nairobi, and somebody just asks you, what is Bitcoin? Yeah. For you to even ask the question, what is Bitcoin? You've already gone above the layman, because you've already heard about what, you've already at least had something called Bitcoin, or you've interacted with somebody who is using Bitcoin. Bitcoin and Ethereum are really, those are really two wide topics, and not just topics, but in my view, Bitcoin in itself should be a course, and same to Ethereum. These are just two separately, because these are the two cryptocurrencies and protocols that have changed the world entirely. They have changed the way we see transactions, because largely initially we saw transactions as centralized. Yeah, so that if I am to do a transaction, that transaction will have to pass through a middleman, and that middleman will have to do a validation of that transaction before we proceed to, before that transaction now succeeds to move to the person who the recipient. I'm going to cover these three very brief topics on Bitcoin. And interestingly, when in the last topic that we covered, the fundamentals of blockchain and cryptocurrencies, at the core of it, we did cover a Bitcoin, because Bitcoin is the mother of them all. And Bitcoin is also, interestingly, a very practical topic, particularly Bitcoin and Ethereum. I find them very practical because by the time you are focusing on the core of Bitcoin, it's important that you should have known or have in mind a little bit of knowledge, or some knowledge about interacting with wallets and how to secure your wallet and all that. Yeah. Then we're also going to handle something on the Lightning Network, and how the Lightning Network is changing, or rather has changed the way Bitcoin transactions are done. and I'm going to switch between probably at some point I'm going to have to probably switch to a different slide to be able to explain certain aspects to you clearly. Then a topic that I'm always very emotional about, and a topic that I find very interesting for me, more even than the technical part, is the trends, the adoption trends. And this is where I bring you to adoption trends, not the adoption trends, particularly with regard to sending of Bitcoin, yeah, but also with regard to the overall adoption of blockchain. In my view, Bitcoin blockchain becomes the foundation of the entire conversation about DLTs and about blockchain. Yeah. So often when people talk about blockchain adoption, yeah, the conversation begins from how do we adopt Bitcoin, and rather in payments, whether it's in payments or whether it's in any kind of transaction, whether it's in, of course, you don't use the Bitcoin blockchain for developing smart contracts and the sort, and that we'll cover in the next session of handling smart contracts. So what is Bitcoin? Bitcoin is a decentralized network of digital currency. Yeah. Now, what did Satoshi Nakamoto say in the Bitcoin white paper? Yeah, that is the first document you have to read, by the way, the Bitcoin white paper that was released by Satoshi Nakamoto. Yeah, because that was the concept paper that defined and described, yeah, the entire idea about Bitcoin. And what was the title of that white paper? Bitcoin, peer-to-peer, a peer-to-peer digital cash. Peer-to-peer digital cash. So for us to understand Bitcoin, we have to first understand the meaning of peer-to-peer digital cash. Yeah. And peer-to-peer digital cash, for you to understand peer-to-peer digital cash, you have to first understand what is the meaning of, you have to understand the opposite of peer-to-peer digital cash. So let's start with the opposite of peer-to-peer digital cash. When you are sending money to, I'm going to use M-Pesa, and I've used this before, but for the benefit of those who didn't get it, because this has to come out clearly for you to be able to understand the concept of Bitcoin. If you use M-Pesa, M-Pesa is a mobile money service in Kenya offered by a company called Safaricom. Yeah, so all you need to say to use M-Pesa is you need a mobile phone and you need a SIM card. Yeah, and you need to be registered with the telecommunication service of Safaricom for you to use M-Pesa. Yeah, today actually they have made it cross to be able to interact across different telecommunication platforms, so that you can be able to even use it, go to an M-Pesa shop or transact from your phone and be able to send money to somebody who's using Airtel Money. Yeah, but at the bottom of it, there is, or at the center of it, there is a trusted third party who is a validator. Yeah, the trusted third party who is a validator ensures that it validates all transactions that come from Benjamin and that is coming to you. Yeah, so the reason why you need to validate these transactions is because you do not trust me. So these transactions have to go to a third party. That third party has to verify whether I have the transactions or whether I have some Bitcoin in my wallet, then is able to transfer, to deduct the Bitcoin from my wallet and send it to your wallet. That trusted third party, yeah, does that model where we use a trusted third party does not happen on Bitcoin. Yeah, So if we had a trusted third party in Bitcoin or the Bitcoin blockchain, there would be a need for a middle company to be able to do that deduction, yeah, and be able to add that Bitcoin to your wallet, as it happens in M-Pesa. So in M-Pesa, I send you M-Pesa, maybe 100 shillings, Kenyan shillings in M-Pesa. That M-Pesa, that amount has to be deducted by Safaricom from my phone or from my account, M-Pesa wallet, and be sent to your M-Pesa wallet. Yeah. When that happens, it is a transaction that is done digitally, but at the center of it is a physical company, a brick and mortar company that is based somewhere, which is Safaricom, which have servers and they have to validate every transaction. Now, when you come to Bitcoin, the role that is being played by Safaricom is now being given to multiple nodes, yeah, or validators, yeah, whose role, or we also call them miners, whose role is to validate these transactions and add new blocks into the Bitcoin blockchain. Yeah. And we talked about how blockchain works and the whole process of a blockchain transaction, but I think I kept a slide on this as well to just cover that. So what do someone need for them to be able to transact or send Bitcoin? Yeah. One, you have to have a wallet. Yeah. You have to have a Bitcoin wallet. A Bitcoin wallet can be, I mean, you don't have to. Sometimes for developers, some of them actually download the entire Bitcoin blockchain into their machines, yeah, which is really heavy. So it's more beneficial to just use to just use wallets that are there for the mass market and be able to interact with the Bitcoin blockchain. And this is the exact process, yeah, when it comes to interacting with blockchain that happens across the other cryptocurrencies. You cannot interact with a blockchain unless you have the wallet set up, yeah. The wallet that is set up, now the way you set up a wallet depends on which wallet you're using. And I believe we did cover the wallets a while back when we talked about the hot wallets, the cold wallets, and the rest. So I would give you an example of a simple wallet like Trust Wallet, yeah, which is owned by Binance. Trust Wallet or the blockchain.com or blockchain wallet, yeah. There are several wallets that you can use to store multiple cryptocurrency. So the Bitcoin blockchain, or rather these wallets, they have to be compatible with the Bitcoin blockchain for you to be able to transact through this wallet, which means the recipient will have to also open a wallet, a Bitcoin, or rather a wallet, and that wallet must have Bitcoin, or rather must be able to, must be compliant with the Bitcoin protocol, so that they can be able to send you a Bitcoin wallet. They can be able to send you Bitcoins. So the journey begins by you installing a Bitcoin wallet or a blockchain wallet. And for starters, I recommend Trust Wallet that you can easily interact with, or rather an exchange wallet if you prefer to use exchanges. If you don't want, if you keep trading and you do not want to keep transferring your Bitcoin. And as I did say when I was talking about wallets, if you have a lot of Bitcoin, then you need a cold wallet, which then you can prefer to use a hardware wallet like Ledger Nano and others. The essence of how Bitcoin blockchain works is at the core. That's why is at the core of blockchain, and that's why for many years blockchain and Bitcoin has been seen as synonymous. So that today we have major companies that largely focus only on Bitcoin as a cryptocurrency, and they do not do any other cryptocurrency. Yeah. They have bought cryptocurrencies in millions of dollars, yeah, some of them in billions, but they only invest in one, that is Bitcoin. Because for many, Bitcoin, the Bitcoin blockchain is synonymous with the term blockchain, yeah, because it was the first use case of blockchain, yeah. And I think I gave you an example of what blockchain is, no, what Bitcoin is. I did tell you that if you compare Bitcoin, if you compare blockchain with the internet age, the internet would be comparable because the internet is the underlying technology, and a use case like email or Facebook are use cases of blockchain. Yeah, so you would say that you have blockchain as the underlying technology, and then Bitcoin and Ether and other cryptocurrencies. Those are now solutions built on top of the underlying technology. Now, when I talk about the underlying technology, in blockchain, there can be different protocols that have different consensus algorithms or consensus protocols. Now, the Bitcoin blockchain, and this is something that I already covered also, the Bitcoin blockchain uses what we call the proof of work. Now, the proof of work is where validators, or what we call miners, have to solve complex mathematical algorithms for them to be able to add a new block into the blockchain. Yeah. So a transaction happens. Let me I don't know if I have that slide here. Yes. I'll just go. I'll move back to that slide in a minute. So A wants to send B some Bitcoins. Yeah. Now A has to go into his wallet, enter the Bitcoin address, then click send. When he clicks send, that transaction is broadcasted to the Bitcoin blockchain network. Now, the computers with the question marks are now the nodes, yeah? The nodes that are spread across the world. These nodes are the validators. They're the people that validate the transactions on the Bitcoin blockchain. So once that validation has happened in step 4, the next thing that happened is those transactions have been approved. Once they have been approved, the Bitcoin now moves to B's wallet. So you must realize that in this instance, A and B must of course have wallets that are compliant with the Bitcoin network. Yeah. 2, they must have the balances. The one sending must have the balance to be able to send. And 3, he must be able to have enough to cover the transaction fees, yeah, of the Bitcoin network. So I will just to expound on the proof of work. You see on step 3, these computers, yeah, these are the nodes. Now, how do they succeed to bring new or supply of new Bitcoins into the economy? In a normal economy, or in a normal in a contemporary world, in a centralized world, the way cash or fiat money is released into the economy is by a central bank, or say Central Bank of India or Reserve Bank of India or Central Bank of Kenya, printing that money. Yeah, of course they work with the companies that print. In Kenya, it's called DataHour. Now DataHour has to print that money. Then central bank has to supply that money into the economy. Yeah. Now, in this case, these nodes, these computers, they are the printers. Yeah, they're the people printing money into the economy, or rather, they're the people supplying this money into the economy. They actually play both roles in a way. Why? Because one, the actual printing, or rather the actual production of new Bitcoins has to be triggered by them. And how do they trigger? If they do not validate transactions, yeah, and add and compute the mathematical algorithm problems, they cannot be able to add new Bitcoins into the Bitcoin economy. Now, new Bitcoins, which are called block rewards, that's how the new Bitcoins coming to the economy is called. When the first Bitcoin was mined, or the first block was mined, which is called the Genesis block, it was mined in 2009. Now, when the Genesis block was mined, the block reward was 50 Bitcoins. So after every 10 minutes, 50 Bitcoins were released into the economy, into the Bitcoin blockchain economy. Yeah. After every 10 minutes, yeah, a block, which means transaction, a number of transactions have been validated. These transactions are bundled together, put into a block. Then this block is chained together with the next block and with the previous block. Yeah. So that every block has some genes of the previous block. Yeah. And remember, that previous block also has genes of the previous block. So it goes all the way to the Genesis block. So for you to be able to, and this is why Bitcoin blockchain is so secure, for you to be able to hack a particular block or hack Bitcoin blockchain, you have to hack the Bitcoin up to the Genesis block. Because the problem comes because you have to unmine and solve these algorithms, yeah? Which becomes so expensive, because before you even complete mining the previous block, another block has been added. Before you even complete getting the middle of unmining or hacking that one, another block has been added. Yeah, so it becomes extremely expensive, yeah, for any hacker trying to hack the Bitcoin blockchain. Now, why is Bitcoin unique compared to the fiat currencies in the contemporary world? Fiat currencies have unlimited supply, which means the government can print as much money as they want. Yeah, of course, they have a number of policies that guide that. But I want to give you an example of a country in Africa that probably lost their control of that policy, and they printed money until they lost control of their financial system. So much that recently, late last year, they decided to create gold coins, yeah, some coins out of gold, so that the economy, the wealthy in the economy and the country can be able to use these gold coins as a storage of value, because their currency had lost so much value it was impossible to be used as a storage of value. This country is called Zimbabwe. Now, in Zimbabwe, you have, and I wish I added some of these into this slide, you have like 100 billion note, one note, yeah, one note of 100 billion. So if you want to go to the shop to buy some basic needs, you probably, or you want to go to the supermarket to do shopping, you probably need to carry billions. Yeah. So you go to the shop and you do some small shopping and you already spent millions. Yeah. And you just bought a few things. Zimbabwe as since 2008, they have experienced hyperinflation, and they have lost the value of their currency several thousands of percentages. Yeah, so much so that the value their currency is almost useless. Yeah, if you go there with $100, you will be shocked how much they'll give you in their currency. So the difference between Bitcoin as a currency, not as a protocol, yeah, and that is important to mention. The difference between Bitcoin as a currency and fiat currency, or something like US dollar, is that Bitcoin has a cap, the maximum supply, yeah, the maximum number that will ever be printed, which is only 21 million Bitcoins. Yeah, right now we've already, the mining has gotten to about 19 million coins. Yeah. So 19 million, more than 19 million have already been mined, which means we are just, say, about 2 million left to go. Now, interestingly, these 2 million will take forever to complete mining. I mean, some have estimated that probably that mining will only, the last coin will probably be mined in the year, is it, somebody has said in the next over 50 to 100 years. And the reason for that, I've never taken my time to actually calculate going down, considering the reducing supply, because Bitcoin uses a model called a model of deflationary. It's a deflationary supply where, as time goes, as transactions go in the future, the number of Bitcoins released into the economy reduces. So I say that it started with 50 Bitcoins. So 50 Bitcoins in 2009, that was what was mined after every 10 minutes. Now, after every 4 years, in the Bitcoin blockchain economy, the amount of Bitcoin, or rather what we call the block reward, yeah, the amount of Bitcoins that are given to miners as reward when they successfully mine is reduced by half. And that activity is what is called the Bitcoin halving. Yeah, halving is a very important activity in the Bitcoin economy. And if you are a speculator who buys Bitcoin for purposes of speculation, probably, or if you are a crypto analyst or learning to be, probably you should analyze the Bitcoin chart from inception, from 2009. One thing you realize is that immediately towards Bitcoin halving, or immediately after Bitcoin halving, there are always a lot of speculation, and there are always a lot of price surge. A good example is we saw in was it 2014? Not 20, yeah, 2014. So we had the last one, the previous one actually happened in 2020. Was it 2020 May? Yes, 2020 May. And for the first time, Bitcoin halving did not actually bring a lot of impact with regard to price immediately after halving. Yeah, if you look at the previous halvings, there was a lot of price impact immediately after mining. But the last Bitcoin halving that happened, the impact on the price was not as much as happened in the other halving events. So from the first 2009, when the block reward was 50 every 10 minutes, it moved to 25. Yeah, after 4 years. After those 4 years, it's always an estimate, by the way. It's not, they don't look at it in terms of years, they look at it in terms of blocks. Yeah, so it is always at the end of, like, after every 210,000 blocks, yeah, that have been added into the blockchain, then a halving happens. So this 210,000 blocks happens after an estimate after every 4 years. So it moved to 25 Bitcoins. Then it moved from 25 Bitcoins. The next halving moved to 12.5 Bitcoins. Then from 12.5 Bitcoins, which was, I think, was it 2016? Yeah. The next halving, 2020, moved us from 12.5 to 6.25. So right now, the supply is 6.25 after every 10 minutes. Of course, even the 10 minutes is not like it is set that it has to be 10 minutes. It is about the difficulty, yeah? Because remember, the miners or validators, they are adding Bitcoin into the economy based on the difficulty level of the mathematical algorithm that they have to solve. with their computers. Yeah. And we talked about mining, I believe so. So we talked about the need for higher computing power, because this higher computing power is what enables them to be able to solve these mathematical algorithms. So when they solve that, then new Bitcoin is added to them. So what happens nowadays is, because of the, and this started to happen a while back, is because of how expensive it is as an individual to put together all that computing power to be able to mine. Sometimes, or several people, sometimes you find people come together, they collect computing power together, or they put together money, then build the necessary mining rigs and be able to combine that computing power, and then they share the block rewards, so that you and me, probably who can't be able to, by the time Bitcoin mining was a big thing, for instance, globally, right now, Bitcoin mining is not largely a big thing because it is so expensive to enter. And probably the block reward has also reduced. In the early days, not even the early days, in 2017, when I joined joined the industry actively, I mean, mining was still an thing, and it was something that anybody wanted to enter into to do, but it was so expensive. But there were companies that created a pool. There's a mining pool. So there are several mining pools where they pull together resources, and they're able to make it possible for anybody to be able to also participate in the mining. Yeah. So if you have, for instance, $1,000, you can be able to invest that and be able to pull together your computing power and successfully compute mathematical algorithm and be able to get a block reward, which then you share, which becomes difficult if you go by yourself with your computer, yeah, because you do not have that amount of computing power. So before I handle the Lightning Network, yeah, before I handle the Lightning Network, I want to just cover something briefly, and that is the key features that we talked about of blockchain. We talked about key features of blockchain, and I'll share with you a more comprehensive slide that covers some of these features that I'm talking about, because I'm having this away from my usual presentation, away from my home. I had to use a different machine that has work instead of the one that carries actually all the original slides for this. So I'll share with you slides that has more detailed slide that has more details with regard to all these topics in a way that you can be able to grasp them well. But as I've said, when you talk about Bitcoin blockchain, it is largely, in my view, largely Bitcoin. When we explain, or when we teach about blockchain, we largely focus on the Bitcoin blockchain. That's why, for instance, this slide, when you talk about how blockchain works, the first thing is you have to talk about how Bitcoin blockchain works, yeah? Because that is the best way that we explain without having to talk about the Byzantine generals problem, because we did talk about the Byzantine generals problem, yeah? So I think I did talk about the mining. I won't talk about the Byzantine generals problem. I want to talk about the Bitcoin Explorer. And that's why I go back to this slide with the ledger. Yeah. So one thing that any of you, the simple way to understand Bitcoin or blockchain without having to be complicated, without having to be complex, yeah, or to make it look like it is something out of this world, is to think of it as a digital ledger. Yeah, a distributed digital ledger, or rather decentralized digital ledger. Now, we all know the meaning of centralized. The opposite is decentralized. So decentralized we all know the meaning of decentralized. Decentralized means that there is no central authority. Yeah. If this class is decentralized, meaning all of us are equal, all of us have equal authority. All of us, if we are to take records about this class, all of us have the capability and equal authority to take that record. Yeah. And all of us do not need any permission of any of us for him to participate in this network or in this class. You can join without anyone's permission, and you can participate in whatever is going on in that in the class without getting the permission of anyone. So the next term that you need to understand is the ledger. Ledger, the layman way of explaining a ledger is a list of items. Yeah, a ledger is a list. So if we write the names of everybody who has attended this, let me just, if you go to the participants and see attendees, you see the list of people attending. That actually is a ledger. Everybody that is attending, yeah, that becomes a ledger. If you go to a bank and get your bank statement, yeah, they give you a statement that shows the transaction that have happened over the several months or over the last few days. That is a ledger. Yeah. So it is a digital, yeah, which means it is held online virtually. It is a digital, yeah, or rather it is a decentralized digital ledger. It is a list of transactions, of Bitcoin transactions, yeah? But what makes it different from other ledgers like M-Pesa? M-Pesa also has a ledger, because if you get your M-Pesa statement, you can be able to see the transactions in a list. But what makes Bitcoin from M-Pesa different from M-Pesa is that Bitcoin's ledger is decentralized, yeah? Which means none of us has control over that ledger. So if I send you one Bitcoin right now, that one Bitcoin has to be recorded in that ledger, yeah, whether I like it or not. That Bitcoin has to be recorded in that ledger. And you're just going to give me a minute. I want to actually take you to a Bitcoin Explorer. Yes, there we go. So you can be able to Google. I mean, there are different platforms that are providing providing this Explorer. You can be able to go online and just Google Bitcoin Explorer. You can get it from blockchain.com. There are several platforms that are sharing this. So you can be able to see this. They have listed blocks. So you see block number this, block number this, block number this. And then you see the number, the block number. Then you see the hash, yeah, of that block. Then you see the miner, the pool or the validators, the computers that were surrounding that on the slide, the computers that were spread. These are the decentralized, independent nodes that actually mine every transaction, or rather validate transactions and mine them and add them into the Bitcoin blockchain. So they validate, then add these blocks into the blockchain, and they're chained together. That's what makes it blockchain. Then you can see the last block that was mined is 8 minutes ago. Yeah, 8 minutes 4 seconds ago. The other one is 15 minutes ago. The other one is recorded 20 minutes ago. Then you see the transaction count. Then you see the nonce. You see the size, which you see, you realize that some of them are smaller, some of them are big. Then you see the total number of Bitcoins that were contained in each on the block. So simply what I'm saying is that unlike the traditional unlike the traditional banking, where you have to go to the bank to get your financial statement so that you can be able to see all the transactions that have happened. In Bitcoin blockchain, you can simply go online and get the what do you call it? The Bitcoin Explorer, and be able to see a record, a ledger of all the transactions that have happened since the inception of Bitcoin. Yeah, since 2009, you can be able to see Bitcoins that have been sent, Bitcoin, all the Bitcoin transactions that have happened, or rather have been transacted online. All those transactions are recorded online. Whether and this is not by your permission. The moment you make a Bitcoin transaction, that has to be recorded on that Explorer. It has to be recorded as part of that ledger of the list of transactions, yeah, without your permission. So I can be able to go online and actually see which wallet, yeah, one wallet has sent a certain amount of Bitcoin to a particular wallet. I can be able to see that when I go to the Explorer. Then now I think we now quickly move to the Lightning Network, which I'm going to cover in 2 slides. So first we have to deal with why Lightning Network is necessary. Bitcoin, the Bitcoin blockchain, when you compare to other contemporary, from just the name Lightning, we are talking about scalability. Because one of the challenges that when you talk to bankers or people in the traditional financial systems, one of the big challenges they talk about when it comes to Bitcoin is scalability. Because if you compare the transaction speed between Bitcoin, Ethereum, and for instance, Visa, yeah, or other banking solutions, it is 2 worlds apart. Bitcoin is super slow when it comes to transaction speed, yeah, about 6-7 transactions per second. So if you compare the transaction speed of some of the like Visa, M-Pesa, they're in thousands, yeah, per second, compared to the Bitcoin becomes totally unscalable. Yeah, it becomes totally impossible to scale it, because if you want to make a payment, then you have to wait for a few minutes for confirmations to happen. Yeah, for the nodes or the validators to actually confirm these transactions and be able to have that Bitcoin transferred. So you're buying something and you have to wait. You're in the supermarket queue and you've already been given the bill and you send Bitcoin and you're standing there on the queue, yeah, waiting for the Bitcoin to reflect before you can be given a receipt. That is not scalable. That is a solution that cannot be used in a real world. Yeah, that solution is a niche market solution, which means it can just be used by a few people who are thrilled perhaps to explore how it is used, or who benefit from it, for instance, by hiding away from the actual highly regulated financial economy, or people who understand the digital economy and just want to use cryptocurrencies, which now are people who are in the Bitcoin, in the cryptocurrency industry. But you see, not everybody is in the cryptocurrency industry, and not everybody will understand, however, how much we campaign or create awareness about Bitcoin or blockchain. Not everybody will understand. There are people who totally, because of the way they are wired, and they are 2 worlds apart with this generation, they are perhaps in their 70s, some of them totally do not have an idea and are not interested. Why? Because some of them are contented with what the solutions they are working with. For instance, in Kenya, if I already have M-Pesa and I can be able to send money using a phone faster than Bitcoin, why do I need Bitcoin? Yeah, that is the question. So the reason why we need Bitcoin is partly because of the decentralized part, or rather largely because of the decentralized part. It is because the Bitcoin blockchain is decentralized. That is the only major difference that makes it a little bit, if we talk about superiority in terms of that, or in terms of security, superior to most or all the financial services that we have today. But now the fact that it cannot be scaled, yeah, the fact that for you to add a particular block, for you to conduct a transaction, a Bitcoin transaction, you have to send the money, use the wallet. When you broadcast, you have to wait before the nodes validate that transaction and they're confirmed before the recipient can be able to receive that Bitcoin. Yeah, that becomes unscalable. Yeah, and that is why there's a project known as Lightning. Yeah, which I will provide with some resources in the comprehensive slides. I'll provide you with resources to be able to catch or to understand properly understand what Lightning is. Now, Lightning and Bitcoin, I mean, perhaps in the future, if we have other sessions, we'll be able to cover comprehensively how Lightning works in terms of how it is built on the blockchain, the technical part. How Lightning is built on the blockchain, because it is actually dependent upon the blockchain network. Yeah. So what are the key, why is Lightning important? Why is the Lightning network really necessary in the Bitcoin economy? Because of the speed. We want to be able to transact with the Bitcoin instantly. We want to increase the speed. We have the decentralization, yes, but we have to increase the transaction speed for it to be able to benefit the current users of the financial market beyond the benefits that we already have. Because if you want me to leave M-Pesa, you have to give me benefits more than what M-Pesa is giving me. So some of the benefits that are key that we can talk about include the ability to transact instantly. Yeah, and we are going to I'm just going to explain to you briefly how and why the Lightning network makes it possible for you to transact instantly, for you to bypass, or rather for you to overcome the Bitcoin challenges of slow speed of transaction or low transaction throughput. Then scalability, being able to transact, or to handle billions of transactions per second. That is what, according to the team that has built Lightning. And Lightning project, by the way, has been funded by most cryptocurrency blockchain projects in the world, because it is a project for the benefit of the entire blockchain economy, not just for the and this is, I say this with a pinch of salt, not just for the Bitcoin economy, although Lightning is built for the Bitcoin blockchain. It is not just for the Bitcoin economy. Why? Because the adoption of Bitcoin, the scalability of Bitcoin, being the major cryptocurrency with 40% dominance on if you look at the coin market cap, Bitcoin dominates with 40%. Yeah, Ethereum is just about 20%. So if you increase scalability of Bitcoin, automatically the scalability of the rest of the cryptocurrencies will climb up. So Lightning is claimed to be able to, or will be capable of handling millions to billions of transactions per second, yeah, across the network. Another important aspect that that I think we should add is the ability to lower the cost of transactions. Yeah, if you look at the Bitcoin blockchain and the Ethereum blockchain, one challenge with the two blockchains is that transaction costs are still quite high. Yeah. And that becomes a challenge when you want to scale a solution. If the transactions cost is still high, then the masses are not able to adopt it because only perhaps a niche market is willing to pay that amount in fees. If you go to Ethereum, the gas fees are high. Now that becomes a challenge. And that's why you see the other alternative coins, or what we call altcoins, that have come after Ethereum, have tried to reduce tremendously the transaction cost, because that is a major challenge. Now, another thing that is expected to be a solution from Lightning Network is the ability to make it its ability to make it possible to interact cross blockchains. Yeah, this in my view is also one of the greatest challenges, because right now we have almost 20,000 cryptocurrencies. Yeah, now those are the ones that are listed on the coin market cap. Now, if we have almost the last time I checked, almost 20,000 cryptocurrencies listed, which one are we going to use and which one are we not going to use? Are we going to go to shops and I want to pay using Ethereum, somebody else wants to pay using Bitcoin, somebody wants to pay using Cardano, somebody else with Dash? What a messy world is going to be. Yeah. So what's important, and remember, some of these blockchains, sometimes you find that if you start your own cryptocurrency, or I start my own Benjamin coin, I need to create my wallet. So everybody is creating their own wallet. So at the end of it, you either have a multi-currency wallet, or everybody has to create their own wallet. And that becomes a challenge. Yeah. So if we can be able to deal with the issue of interoperability, yeah, making it possible that blockchains that are using the same cryptographic hash function can be able to interact, can be able to be interoperable. This can also increase scalability big time. So I'm just trying to scroll this. I don't know what's happening. Anyway, time has really gone. So I'm gonna really rush through to just try to explain to you how the Lightning Network works. So one of the challenges of the Bitcoin blockchain, and that has also happened with the Ethereum blockchain, is that the size of transactions, the size of blocks are always quite big, so that, and that's why it becomes impossible for you if you want to maybe download the entire Bitcoin blockchain. I mean, it will take you days, probably more than a day, depending on your internet speed and capacity of the computer, to be able to fully download the entire Bitcoin blockchain. So the solution that the Lightning Network team came with is where, instead of having to have all the data about a transaction stored in the, or rather the entire transaction done on the Bitcoin blockchain, yeah, they can have you put the transaction can be done on top of the Bitcoin blockchain, but the recording happens on the Bitcoin blockchain. Yeah. So you want to send me some Bitcoins. Yeah. The transaction is broadcasted. Of course, that request is broadcasted on the Bitcoin blockchain. Yeah. The transaction, the entire confirmation and all that happens on this Lightning Network. Yeah. And then because by it happening on top of the Lightning Network, or on this Lightning Network, it increases the possible speed, the possible transaction speed, yeah, which then makes it faster compared to when you have to wait for the transaction to happen entirely on the Bitcoin blockchain. And that makes the Lightning Network a very crucial project when it comes to scaling the Bitcoin blockchain. With regard to what are the adoption trends of Bitcoin, now Bitcoin has limited use cases. Yeah, very limited use cases. Because Bitcoin is only focused, if you look at the white paper, is Bitcoin peer-to-peer digital cash. So it is focused on being a currency. It is focused on its role as a peer-to-peer digital cash. It has no capabilities with regard to development of smart contracts. So you won't be using the Bitcoin blockchain to develop a smart contract. You are not going to use Bitcoin blockchain to develop a whole set of things. But that currency in particular, what are its use cases? Of course, the number one use case is that Bitcoin is usable as a currency. The fact that you can be able to use Bitcoin as a currency, as a medium of exchange, and you can be able to use it as a store of value, yeah, means that Bitcoin has the capability of being used as a currency. Yeah. Actually, if you look at when you look at the charts right from the start of Bitcoin to date, you look at the charts, the Bitcoin charts when it comes to value growth, and you compare it to the value growth of gold and other assets, Bitcoin has actually given, or rather, Bitcoin actually given investors a better, what you call, it has given investors a better return on investment compared to the other asset classes like gold or silver or the rest. So when you talk about adoption trends, you look at areas where Bitcoin is already being used. And for me, number one adoption trend and number two adoption trend, or rather the adoption trend, revolves around the use case of Bitcoin being an asset class. Yeah, Bitcoin as an investment, as a speculative asset, not as a currency. Yeah. Although in Kenya, there are multiple shops right now that accept Bitcoin for payments, yeah, but Bitcoin is not popularly being used as a payment. Instead, it is popularly being used as a speculative asset, where people can be able to speculate. You can be able to buy Bitcoin today, sell tomorrow at a higher cost. I mean, in the evening when I went to make a presentation to somebody who is also investing in Bitcoin or in cryptocurrencies, and the price of Bitcoin was already headed to $18,000. Yeah, it was about $18,000. Now, if we look at that, and that's according to CoinMarketCap, on some exchanges probably they still, particularly on peer-to-peer exchanges, P2P exchanges, some of them probably the price is still low because they probably regulate it internally for profit purposes. But really, Bitcoin, if you look at major companies that have invested in Bitcoin, including what do you call it? A Tesla that invested in Bitcoin, and really they made their first mega profit out of their Bitcoin investment that they didn't make making Teslas or selling Tesla. You look at the adoption of Bitcoin as a legal tender, yeah, by El Salvador, which means right now Bitcoin is not just a cryptocurrency, it is also a foreign currency, because there's a country, actually two right now, that have made Bitcoin a legal tender. Yeah, in another country in Africa called Central African Republic, Bitcoin has also been made a legal tender. Yeah. I don't know about recently Brazil passed a law with regard to Bitcoin and cryptocurrencies, and we see a lot of regulatory trends with regard to adoption of Bitcoin and with regard to adoption of cryptocurrency. So anything adoption with regard to cryptocurrency starts with Bitcoin. So I think over the next few years, we are really going to see a lot of developments revolving around the regulation of Bitcoin. We're going to see a lot of in the US. We've already seen the Senate. We've already seen the regulators working on how to properly provide clear regulatory frameworks for cryptocurrency. In South Africa, they are working on something. Of course, they already released a paper that is sort of tentative. In Kenya, I engage a lot with members of parliament, and in Kenya as well, particularly a few weeks ago, for instance, the government, one of the members of parliament released or sent a bill to parliament with regard to taxing, creating taxation for cryptocurrencies. Yeah. And now the question that we are discussing right now with some of the regulators in Kenya is with regard to how do you introduce taxation before you provide or before you create a regulatory framework for this for cryptocurrencies and Bitcoin. So you have to first create a regulatory framework before you can provide or before you can be able to tax it. All right, so there is a lots and lots and lots with little on the slides, and I'm gonna send you the other slide that is in my main computer that I wasn't able to get here, that covers much of this with regard to Bitcoin and Lightning Network. Yeah, I think I'm gonna stop it right there. I don't know if there are any questions. So I was reading the question by Shitu. Who decided the limit value, or what was it from demand and supply? Yes, it was from demand and supply with regard to the value, not with regard to I do not know how the initial Bitcoin developers, that is Satoshi Nakamoto. Satoshi Nakamoto is a pseudonym. We do not know exactly who he is. Yeah, but largely it is seen to be a group of developers, yeah, who developed the Bitcoin blockchain and decided to remain anonymous. Yeah, they're the one who created the original algorithm with regard to Bitcoin, yeah, or the original Bitcoin blockchain protocol. And in that protocol, yeah, they're the ones who decided the consensus protocol. They're the ones who decided to use the proof of work, which means people have to solve the mathematical algorithms to add supply into the economy. Yeah, and they're also the ones that therefore ideally decided on the limit of supply, which is the 21 million. Yeah, so but with regard to the value, which is the price, it is now entirely largely on speculation. It is with regard to demand and supply. That's why in 2010, a gentleman known as Laszlo, yeah, Laszlo, he bought two pizzas, yeah, with 10,000 Bitcoins. Like he paid 10,000 Bitcoins to buy two pieces of pizza. Now, that probably today is the most expensive pizza ever, because 10,000 Bitcoins, if you multiply times $18,000, that is a lot, yeah? That is a lot. That is crazily a lot. And that is how much Laszlo paid to buy two pizzas. Why? Because the demand in 2010 for Bitcoin was so low. Nobody wanted to take Bitcoin for payment. Now, who knew about Bitcoin? Probably just a set of a few developers who were interacting in some platforms and learned about Bitcoin. And also, or the initial people who are mining, which I believe Laszlo was one of them who received the initial Bitcoin from mining. Yeah. So because then there were probably a few miners, and if you're mining, then you have to earn the Bitcoins. And where do you take them? You've been storing them, you have thousands of them, and you know where to use them. Then finally you get somebody selling pizza and you can accept it. But what's happening today, as time goes, and that's why halving normally has an impact with regard to pricing. When we are headed to halving, the price of Bitcoin, normally there is a lot of price surge. It normally impacts the price. Because the supply reduced. Because if let's compare it to what's happened in the US during the COVID period, what is called the quantitative easing. Quantitative easing is where the government or a central bank prints more money because the economy is tight. So they decide to print more money, and use that money to help the economy. So the US printed a lot of money, in their social welfare package, where they were giving some maintenance money to the citizens. And because of that, it affected to a big extent the global economy. Why? Because of the increased supply of the dollars in the market. And right now they have to mop up. And that's why the economy is tight, because among other factors, the US government has to reduce the public expenditure with regard to releasing more dollars into the economy, because there's a lot already in the market. So Bitcoin, as the supply reduces towards having the total 21 million supplied, people are going to share this because demand is increasing. Right now, according to data by Chainalysis, only about 4% of the world have adopted cryptocurrencies. So imagine when we get to 30%, all these people will be scrambling for only about, say, by then probably we'll be at 20 million Bitcoins. And mark you, not all the 20 millions are available. According to data, again, about 5 million Bitcoins have been lost. Those are people who lost their wallets. Because they were mining Bitcoin was worthless to them. They lost the wallet keys, private keys. They don't have the recovery phrase, and that's how they lost that Bitcoin. According to data, about 5 million Bitcoins have been lost. And in my view, I think the way they reached that number is probably by considering a certain Bitcoins that did not move, and they were not in the initial wallets of miners, because largely the Bitcoins that have not moved several times is the ones that were put into the Satoshi Nakamoto wallet, about 1 million Bitcoins. If not, could it mean it will get scarce at some stage, making it artificially expensive? Yes, that is the concept. That is the idea. If you look at the projections for Bitcoin right now, the late McAfee, John McAfee, who was so bullish about Bitcoin, he had the wildest speculation, wildest projections of Bitcoin. He actually said that Bitcoin will reach $1 million. Right now, most projections talk about Bitcoin hitting $100,000 over the next, say, 2 years. Those are some of the projections, which of course is anybody can project the way they want, but there are a lot of factors affecting Bitcoin that would make the prices go up or down, and that I leave to an analyst, or I leave to private investment advisory, and that is not investment advice. Does that mean that if I know your account number, I will be able to see all your transactions or their governance around them? Yes. If you actually know my wallet, if you know my wallet address, you can be able to use that to track transactions, the Bitcoin transactions, and be able to trace when I send a Bitcoin. And that is what we call Bitcoin forensic or cryptocurrency forensics. That's how law enforcement in the US are able to track hackers when they hack or use malware to get ransom in form of Bitcoin. That's how law enforcement are able to trace them, because they're able to track down their wallet addresses to the down to the IP address that received them. Can you please explain more on how Bitcoin is used as an investment? Now, I don't know how much I can explain on that because your time has gone, but really with regard to Bitcoin as an investment, Bitcoin is largely an investment asset. Of course, it can be used as a currency, it can be used as a medium of exchange, but how do you use it as an investment? Largely, you can trade Bitcoin, which you become an active trader, where you can be able to trade, become a day trader or become a swing trader. Myself, I largely buy Bitcoin as a long-term asset. So I buy Bitcoin today. I mean, when the prices are low, I don't even bother myself because I know where Bitcoin is going with regard to price. So the time will come for me to sell. So see Bitcoin as a digital asset. Don't see it largely as a speculative asset. When you see it as a digital asset, you're able to really interact with Bitcoin. So the topic Bitcoin is largely limited and revolves largely around the investment aspect and the Bitcoin as a currency aspect. Compared to when you talk about Ethereum, Ethereum is more broad because it has more applications and it has extensive adoption angles that can be explored. Shitu, probably we can probably another day handle another session where we can talk about just the other aspects of Bitcoin and Bitcoin investment. Thank you.